Brothers and sisters in the hustle, if you're listening to this right now, you're not just chasing wealth, you're building an empire. From zero to CEO isn't just a phrase, it's a mindset. It's about taking the world's most potent wealth engines and using them to propel yourself from where you are to where you want to be. So buckle up, I'm about to unveil the top 5 investments for 2025 that could turn your journey into one legendary success story. You want to build massive wealth in 2025 and beyond, then you can't play the same game everyone else is playing. The truth is, traditional industries move slow, they crawl, but innovation-led sectors, they sprint. That's where exponential wealth is created, not over decades, but in a handful of years. Every empire you've ever admired, every fortune that looks untouchable today, was built because someone got into the right trend before the rest of the world even realized it was happening. Right now, the sectors that are rewriting the rules of the economy are technology, artificial intelligence, clean energy, biotech, digital infrastructure, and cybersecurity. And if you don't take your position in these spaces, you're choosing to sit on the sidelines while others own the future. Think about artificial intelligence for a second. It's not just a buzzword anymore. AI is not coming, it's already here, reshaping entire industries in real time. The companies building AI tools, running data centers, creating the chips that power machine learning, and the infrastructure that keeps this all online are becoming the backbone of civilization. Every app, every bank, every logistics chain, every security system is moving toward AI integration. The world will not slow down and wait for you to catch up. Either you own the future, or you rent it from those who do. Now add clean energy to the mix. Global governments and corporations are pouring billions into renewables, solar grids, wind farms, electric vehicles, and battery storage. This isn't just about saving the planet, it's about power, literally. Energy is the bloodline of every economy, and as we transition away from fossil fuels, the companies that dominate renewable technology are going to control the arteries of global growth. If you hold positions in those leaders, your portfolio is riding the biggest structural shift in energy markets since the Industrial Revolution. Let's talk biotech. Medicine is changing forever. Gene editing, personalized healthcare, mRNA technology, we saw how rapidly the world turned to biotech during a crisis. Now imagine that same speed applied to curing chronic diseases, extending human life, and building billion-dollar drug pipelines. The wealth being created in this sector isn't just about companies growing, it's about them becoming indispensable to human survival. That's the kind of moat you want to invest in. And then there's digital infrastructure. The world isn't running on oil alone anymore, it's running on data. Data centers, cloud computing, 5G and beyond. Cybersecurity, this is the new highway system of the global economy. Every video streamed, every transaction processed, every algorithm deployed, it all rides on digital rails. Without it, the modern economy shuts down. The more dependent we become on this system, the more valuable the companies maintaining and expanding it will be. If you aren't buying into the backbone of data and digital infrastructure, you're ignoring the modern equivalent of buying railroads in the 1800s or the internet in the 1990s. Here's the reality: innovation-led sectors don't just create companies, they create ecosystems. One breakthrough unlocks another. AI demands more energy, so clean energy and battery storage expand. More data means more need for cybersecurity, so new companies emerge to defend the system. Healthcare breakthroughs need AI-powered diagnostics. Every piece fuels the next. If you position yourself at the center of these interlocking gears, your wealth doesn't just grow, it compounds at a level most people will never experience. But don't get this twisted: investing in innovation doesn't mean chasing hype blindly. It means studying the strongest players, the companies with solid balance sheets, the innovators with defensible technology, the leaders with visionary management. It means catching the disruptors before they become household names. By the time the masses catch on, the biggest gains are gone. The ones who move early with conviction are the ones who write their own destiny. In 2025, the opportunity is crystal clear. The old playbook of waiting for slow, predictable returns will not make you wealthy. That may preserve capital, but it won't multiply it. To multiply, you need to be where the world is moving, not where it has already been. You need to turbocharge your portfolio by owning innovation-led sectors that are accelerating humanity forward. The next decade belongs to builders, inventors, and visionaries. If you're serious about turning ambition into legacy, then you align your capital with the very forces reshaping civilization itself. This isn't optional. This is survival. Money is energy, and energy flows where the future is being created. If you hesitate, that energy will pass you by and fill the pockets of the ones bold enough to act. So the question you have to ask yourself is simple. Are you watching history being made, or are you building the kind of future that generations ahead will look back on and say, that's where it all began? Wealth isn't built on luck, it's built on discipline. Everybody wants the home run, everybody wants the flashy play that doubles overnight, but the people who actually cross the finish line and stay there understand the power of anchoring. You can chase all the innovation in the world, but if your foundation is shaky, one storm can wipe you out. That's why the smartest money, the billionaires, the institutions, and the people who never have to work another day in their life always keep a core anchor in broad, diversified index exposure. This isn't a safety net, it's the engine that compounds silently, relentlessly, while you sleep. An index is more than just a basket of stocks. It's ownership of an entire economy. Take the S&P 500 when you buy it. You're instantly holding the biggest and most profitable companies in the United States. Apple, Microsoft, Amazon, Nvidia, the names that are driving human behavior every single day. Every time someone buys an iPhone, streams a show, trains an AI model, or pays for cloud storage, you get a piece of the action. The NASDAQ 100, that's technology's heartbeat, the innovators, the disruptors, the future makers. Buying into it means you're not betting on a single company, you're betting on the entire wave of digital progress. Now here's what separates this from hype: chasing, consistency. Individual stocks rise and fall. Some make millionaires, others wipe portfolios clean. But indexes are designed to grow over time because they constantly recycle weakness out and bring strength in. A company that fails gets booted. A company that dominates gets added. You don't have to pick winners, the structure does it for you. That's why over decades indexes crush most active traders and fund managers. The system is ruthless in one way. It rewards strength and erases weakness. And if you hold the index, you benefit from that process. Compounding is the real magic here. When you anchor your portfolio in a broad index fund, you're letting time become your greatest partner. Think about it, a simple 8 to 10% annualized return doubles your money roughly every 7 to 9 years. You don't feel it in the short run, but in the long run it's unstoppable. That's why so many people look back and say, if I had just held the index, I'd already be free. Don't let that be your regret. Anchoring doesn't mean you stop chasing growth. It means you give yourself the stability to chase growth without blowing up. You want to take calculated swings in AI, biotech, or private markets. Fine, but those swings should be built on a core that's unshakable. The anchor lets you play offense because you know your defense is always on the field. Without that, you're exposed. With it, you're invincible. Look at history. The S&P 500 has powered through wars, recessions, crashes, political chaos, pandemics, and every time, it not only recovers, it climbs higher. Why? Because it represents human productivity, ingenuity, and progress. As long as humans keep creating, building, and consuming, the index keeps marching upward. You're not betting on a trend, you're betting on the resilience of civilization itself. Don't underestimate the psychological power of this either. When you have a diversified index core, you stop panicking, you stop second guessing every dip, you can sit through volatility because you know the system is designed to win over time. That mental stability keeps you from making desperate moves, and that's often the difference between the rich and the broke. The broke sell in fear, the rich anchor in conviction. The beauty is, you don't need a fortune to start. A few $100s a month into an index fund, reinvested consistently, can snowball into a portfolio that makes you financially untouchable. That's not a theory, that's math, but the key is discipline. Most people can't stay consistent because they're addicted to quick results. They chase every shiny stock tip and lose sight of the strategy. Don't be that person. Be the one who commits to the process and watches the empire rise, brick by brick. When you hear about legendary investors, the ones who seem untouchable, understand this: their edge isn't just what they pick, it's what they never let go of, the anchor, the core, the exposure that's so broad and so resilient, it keeps paying them for life. That's how wealth transitions from fragile to permanent. So here's the truth: if you want to play the game like an amateur, keep hunting for lottery tickets. If you want to play like the CEO, the ones who think in decades instead of days, then build your anchor in diversified index exposure. It's not glamorous, but it's powerful. It's not fast, but it's unstoppable. The future belongs to those who can balance offense with defense, ambition with discipline, boldness with patience. This is your anchor. Use it, and let the world's progress compound your wealth beyond imagination. If you want to separate yourself from the crowd, you can't just swim in the same waters as everyone else. The stock market is where the masses play, and while there's money to be made there, the truth is the real wealth, the kind that shapes dynasties, is often built in the private markets and hard assets the public doesn't even see. This is the playground of institutions, billionaires, and families who have been building wealth for generations. If you want to build massive wealth, you have to learn to think the same way. Private markets are where capital flows before the headlines. They're where companies grow, scale, and dominate before they ever ring the opening bell on Wall Street. By the time most people hear about a business through an IPO, the insiders have already multiplied their money. Private equity, private credit, venture capital, these aren't just fancy words. They're engines of compounding wealth. The reason is simple. They're less crowded, less regulated, and offer higher potential returns because you're stepping in earlier, when the risks are higher but the upside is massive. Private equity is about taking businesses that are undervalued, restructuring them, optimizing them, and then selling them or taking them public at a much higher valuation. Imagine buying into a company when it's worth $100 million and writing it to $1 billion. That's the kind of scale we're talking about. Private credit. In a world where banks are tightening lending, private lenders are stepping in to finance businesses and projects at higher rates, which means strong, consistent cash flows for investors and venture capital. That's betting on tomorrow's giants today. Every massive company you know, Google, Amazon, Tesla, they all started as private ventures backed by bold capital when nobody else believed in them. Then there are real assets. Tangible wealth, land, real estate, infrastructure, commodities. These aren't just numbers on a screen. They're hard anchors in the real world. People will always need a place to live. Cities will always expand. Supply chains will always need warehouses, ports, energy pipelines. And the kicker is this: inflation only makes real assets more valuable. When the cost of living rises, rents rise, property values rise, replacement costs rise. That's why the wealthiest families on earth have massive portions of their portfolios locked into real estate and infrastructure. It protects their capital and compounds it at the same time. Think about the U.S. housing market right now. There's a structural shortage of homes. Demand is rising faster than supply. That's not a short term cycle, that's a decade-long opportunity. Builders, developers, and smart capital are stepping in to fill that gap, and the returns will be extraordinary for those positioned correctly. The same applies globally. Urbanization, population growth, and the shift towards sustainable housing are creating once-in-a-generation openings. The key with private markets and real assets is access. The gates are higher, the doors aren't always open, but the ones who get in early reap the rewards. This is why networking, relationships, and building credibility in the world of capital matter. Because once you're on the inside, you're no longer just reacting to opportunities, you're creating them. Deals come to you before they ever hit the public radar. That's the level you need to climb toward if you want to play the game at the top. Of course, these arenas demand patience. You don't flip private equity in 6 months. You don't turn real estate in a week. These are long-term commitments, multi-year plays where the compounding effect becomes unstoppable. And that's exactly why they're so powerful. While everyone else is chasing quick trades, you're positioning yourself in assets that build wealth quietly, steadily, until one day you wake up and realize your portfolio has transformed into an empire. Diversification here is crucial. You don't put everything into one property or one venture. You spread across different private strategies, different asset classes, different geographies. That way, you reduce risk while maintaining exposure to powerful growth. It's the same principle as anchoring with indexes, but this time you're playing in the exclusive leagues where only those who think big are allowed to enter. Understand this, private markets and real assets aren't about being flashy. They're about being strategic. They don't always make headlines, but they make fortunes. The kind of fortunes that buy freedom, buy influence, and buy security for generations to come. You're not just buying numbers, you're buying control. Control over hard assets, control over cash flows, control over the future. So while the crowd fights over pennies in the stock market, you're positioning yourself in the quiet arenas, where dollars multiply into millions and millions into billions. That's the mindset difference. That's the move that shifts you from chasing wealth to commanding it. There's a reason some investors never escape mediocrity, while others build fortunes that look untouchable. It comes down to this: the bold don't just anchor their portfolios, they also take strategic bets on high-performance equities. These are not lottery tickets. These are calculated plays on companies with the momentum, vision, and leadership to change industries and dominate markets. When you catch one of these rockets early and hold with conviction, it doesn't just add to your wealth, it multiplies it in ways the average investor can't even imagine. Look at the history of the markets. Every decade has its champions. In the 80s, it was companies that rode the wave of computing. In the 90s, it was the internet giants. In the 2000s, it was platforms like Amazon and Apple scaling global networks. In the 2010s, it was Tesla redefining mobility and Netflix reshaping entertainment. The names change, but the principle doesn't. The investors who spotted these companies early and held on didn't just win. They won big enough to change their entire lives. That's the power of high-performance equities. But let's be clear, this isn't about chasing hype. Most people lose money in the market because they confuse speculation with strategy. They buy whatever stock is trending, they panic when it dips, and they sell out just before it takes off. That's not investing, that's gambling. Strategic bets are different. They're based on research, conviction, and a clear understanding of where the world is moving. It's seeing the long-term trajectory before the rest of the crowd wakes up. High-performance equities are companies with strong fundamentals, disruptive products, visionary leadership, and explosive growth potential. Think about what NVIDIA has done by powering the AI revolution. Think about Palantir with its data-driven platforms being woven into governments and corporations across the globe. These aren't random guesses, they're companies positioned at the center of megatrends that will define the next decade. The world can't advance without them, and that's why their growth is unstoppable. Timing matters, but conviction matters more. When you identify a company with the DNA to dominate, you don't jump in and out with every price swing. You build your position, you scale it responsibly, and you let compounding do its job. The hardest part about these bets isn't spotting them, it's having the courage to hold when everyone else doubts. That's where discipline separates winners from quitters. Risk is always part of the game, and that's why these plays are strategic, not reckless. You don't bet your entire portfolio on one stock. You allocate a portion of your capital to these high-performance names while the rest of your portfolio provides stability. That way, if you catch the next Amazon, Tesla, or Nvidia, your upside is explosive, but your downside doesn't destroy you. That's the formula: stability plus strategic risk equals massive wealth creation. Another critical factor is innovation. Companies that consistently innovate are the ones that turn into legends. Look at Apple, it didn't stop at computers. It created the iPod, then the iPhone, then services that keep people locked into its ecosystem for life. Look at Amazon, from books to cloud computing to logistics. Every pivot became a trillion-dollar opportunity. The companies worth betting on are the ones that never stop reinventing themselves. That's how you know their runway is long and their ceiling is high. You also have to study leadership. Behind every hyper-performance equity is a leader who refuses to play small. Elon Musk, Jeff Bezos, Reed Hastings, Jensen Huang, these aren't just CEO, they're visionaries. They don't follow markets, they create markets. When you invest in a company like that, you're betting on the mind of someone who can see 10 years into the future and drag the world in that direction. That's a bet worth making. In the end, the goal isn't to fill your portfolio with dozens of these names. You don't need dozens, you need a handful. One or two hyper-performance equities held with conviction over a decade can change everything. That's the beauty of asymmetric bets. The downside is limited, but the upside is infinite. Most people never get there because they're too busy chasing quick wins. Don't fall into that trap. Play the long game with the right players. So here's the reality: anchoring your wealth with stability will keep you secure, but making strategic bets on hyper-performance equities is what takes you from comfortable to legendary. It's what creates the kind of wealth that doesn't just support you but builds a legacy that outlives you. The opportunities are out there right now. Companies rewriting the rules, disrupting industries, and shaping the future. The only question is whether you have the courage and the vision to stake your claim before the world catches on. Wealth is not just about chasing the next big thing. It's about protecting and multiplying what you build. It's easy to make money once. It's harder to keep it, and it's hardest to grow it through every storm. The secret isn't just in assets or markets, it's in resilience. And resilience in the business world comes down to three things: governance, innovation, and human capital. These are the forces that determine whether a company crumbles under pressure or dominates through chaos. If you're serious about long-term wealth, you have to put your capital where resilience lives. Start with governance. Too many people ignore it because it doesn't sound flashy. But governance is the invisible shield that protects companies from implosion. A company can have the best product in the world, but if it's run by weak leadership, if its board is compromised, if its decision-making is corrupt or short-sighted, it's a ticking time bomb. The biggest corporate collapses in history weren't because the products failed, they were because the leadership failed. When you invest in businesses that prioritize transparency, accountability, and long-term vision, you're betting on stability. Governance is what ensures the company's foundation doesn't crack when the pressure comes, and pressure always comes. Then there's innovation. The world is ruthless to those who stand still. A company that doesn't evolve is a company already dying. Look at the graveyard of businesses that once dominated but refused to adapt. Blockbuster laughed at Netflix. Kodak ignored digital cameras. BlackBerry underestimated Apple. They're all gone because they stopped innovating. On the flip side, the legends never stop. Apple reinvented itself again and again. Amazon transformed from a bookstore into a global logistics empire and the backbone of cloud computing. Tesla keeps pushing boundaries in cars, energy, and AI. Innovation isn't optional, it's survival. When you invest in companies that innovate relentlessly, you're investing in momentum that compounds over decades. And then comes the most underestimated factor of them all, human capital. At the end of the day, businesses are built by people. Algorithms, machines, and systems may scale operations, but without visionary leaders, talented teams, and cultures that attract the best minds, companies can't sustain greatness. The truth is, the right people turn average resources into extraordinary results. The wrong people turn extraordinary resources into disasters. That's why some companies thrive in downturns while others collapse. The difference isn't the market, it's the people steering the ship. Resilient companies recruit the best talent, empower them, and create cultures that encourage creativity and execution. They don't settle for mediocrity. They hunt for brilliance, and that brilliance becomes a competitive edge no one else can replicate. You can copy a product, but you can't copy the leadership DNA of a great team. That's why human capital is one of the most powerful moats in business. Now here's why this matters for you as an investor. Anybody can buy into hype during a bull run. Anybody can ride a wave when everything is going up. But when markets crash, when the economy shakes, when uncertainty grips the world, only the companies with strong governance, relentless innovation, and elite human capital survive and thrive. If your capital is parked there, you don't just survive the downturns, you grow through them. And when the cycle turns back up, you're holding positions in companies that have gained even more market share while their weaker competitors disappeared. That's resilience. That's how you turn volatility into opportunity. You stop seeing crises as threats and start seeing them as accelerators, because you know the companies you own are built to handle the storm. That's how real wealth is created, not by avoiding turbulence, but by choosing vehicles strong enough to fly through it. So when you're analyzing where to put your money in 2025 and beyond, don't just look at revenue and product lines. Ask the deeper questions. Who's running this company? Do they have integrity? Do they have vision? Do they have a proven record of adapting to change? Is this company innovating at a pace that keeps it ahead of disruption? Are they building a team of killers who can execute relentlessly? If the answers are yes, you're not just buying stock, you're buying resilience. And resilience is what keeps wealth alive when the world turns upside down, because it always will. Markets cycle, economies shift, shocks hit out of nowhere. But the companies anchored in governance, driven by innovation, and powered by human capital don't just weather the storm, they come out stronger. That's where you want your money. That's how you build wealth that lasts beyond you. So here's your blueprint. Own the infrastructure of the future, anchor your portfolio in broad-based funds, seize private market arbitrage, swing for extraordinary equity gains, and invest in rock-solid businesses run by brilliant people. From zero, you don't just build wealth, you build legacy. That's what separates the CEO from the spectators. Now go, take these 5 moves, apply them relentlessly, iterate smartly, and remember, CEO aren't born, they're minted by action. I'll see you at the top.